Today is February 16th, 2017, or a great time to go buy Valentine's chocolates and cards for next year. If you are of that persuasion. Alan, good to see you. Bruce, welcome on board. Mr. Healy, good to see you. Clancy, welcome. Tien, Wen, good to see you. Mr. Mueller, Wallace, welcome. I don't go to, Earl says, why weren't you at the Orlando Money Show? Earl, we don't go to those. We don't go to the Vegas Money Show. We don't go to the Orlando Money Show. They're generally, we waste a lot of money when we go there. Most of our marketing is word of mouth. I like when people that we like tell people that they like to buy our software. And we get to work with some really great people as a result. And so historically, traditionally, going to these big expos costs thousands of dollars that we could spend supporting and helping causes that are important to us. And so that's what we choose to do. Most of the people who exhibit at money shows are stroking their egos, amongst other things, and it's a giant urination contest for some of those companies that have extra money to burn. That's just my opinion. It's a strong one, obviously. Used some really colorful language there, I'm sorry. Yeah, exactly. Earl said, I just go for the free pens and ball caps. Oh, Earl, we host our own live event, and there'll be another announcement coming out. We actually we have an exclusive live training event once a year in Las Vegas. We rent out a conference room, buy a bunch of hotel rooms for our customers, and we spend 2 days. It's essentially a 2-day university where we teach newer and veteran customers alike some pretty amazing setups. We give them new indicators that we've developed for the coming year and have a chance to meet people face to face, as well as get the customers to interact and network and share their personal contact information so that they can form close-knit trading groups and pair up with people that are trading the same markets. It's really a spectacular time. So that's what we focus on. Yep. Yeah, no, you should definitely come. It's a wonder. I don't know anyone that's ever come that went back home and not felt like they were blown away. We want to, and we always give away more information. This year we have more classes and more trading setups than we've ever had in years prior. So it's going to be a great time. People bring their wives. If you have a spouse, bring them as a +1 and invite them along for lunch too. We have a bunch of traders who bring their wives, and it's always a pleasure to meet the people supporting the people that you work with. What are we doing here? It's Thursday again, and we have another opportunity to talk about something that trading institutions really don't like us to talk about. We're going to continue to hammer away and continue to spread the word about one of the most significant edges you're not using if you don't have the Flux timing software. Most of the traders that we meet, whether it's at a crazy expo or over the phone or in the forums that we're members of, when we ask them the question, are you focused at all on the dimension of time, 80 to 90% of those people say no. But when we ask them how important is timing in your setup, what happens if you're off 3 or 4 bars to the right or the left? people will tell you 80+% of the time that it's extremely important. So people say that it's important, but they have no means of accomplishing or integrating timing into their trading. And so our mission statement, our purpose, is to create institutional grade analyses, methods, and tools that retail traders, everyday stay-at-home men and women with $10 to $100,000+ accounts can use to level the edge that the banks have stripped away from the retail trading community. We want to empower our community of customers to rise up to the sophistication level that the banks are using to communicate with one another. And so today is really about, for those of you looking at us for the first time or maybe the second time, it's about legitimizing the process and the method. It's about educating you to the language of time. And hopefully by the end of this afternoon, when we're finished, I will have successfully demonstrated to you that the language of time is the conduit of communication of the trading institutions who are stealing your money. I believe banks are stealing the money from average everyday traders all over the world. I believe that in every government around the world, the banks have infiltrated to some extent or another and created open season pathways to wreak havoc on the accounts of average investors like you. There is no one coming to save you. There is no commission being formed to investigate the issues associated with gouging smaller investors. That commission never existed, and nor will it ever exist. We are, in a very real, very true sense, extremely alone and vulnerable. You have elected to participate in an endeavor with a 90+% failure rate. The largest financial institutions in the globe, in the world, on planet Earth, this little blue marble that exists in the middle of nowhere. 1% of the wealth controllers, the top 1%, Goldman Sachs, JP Morgan, fill in the blank, are rooting for your failure and have hired the best and the brightest. They have aligned themselves with the most powerful technology offerings. They have created the fastest conduits to the markets via cables. They have purposefully and willingly and speedily installed underground and under oceans between continents. And every day that you wake up and say to yourself, I'm going to conquer that, I'm going to beat those people at their own game with my 1990s, 2000s lagging technical indicators. Every week that you wake up and say to yourself, I'm going to use my up arrow, down arrow system that I bought online from some guy with a Russian accent for $100, you are deluding yourself and playing into the propaganda, playing into the ulterior motives of banks who are systematically draining your accounts dry. Wow, that was pretty impressive. I was impressed with my own speech just now. I didn't rehearse that or anything. I must really believe in this stuff. So, my job, we build hammers for traders. We build tools that level the playing field. I'm going to give you an opportunity today, and we'll prove to you demonstrably. When we're done, there'll be no doubt. I'm going to show you that we can intercept the communications in the language of time of these juggernauts, so that tomorrow, Monday, Tuesday, Wednesday, Thursday of next week, you can wake prepared, knowing when the giants are going to move, knowing what direction they're most likely to push. And when they move, you move. And when they sit, you sit. And when they chop, you sit on your hands. And it is a much less stressful endeavor than being glued to your screen with your eyes wide open, your finger on the button of your mouse, your pulse and respiration elevated, your sphincter contracted, your mind racing, your heart pumping, your blood pressure higher, thinking to yourself, is this the bar? Is this the signal? What about that signal? What do I do? Is anybody making money doing this? Did they send my statement in the mail? Should I run out to the mailbox and hide it from my wife? She told me that if I wasn't successful by the end of the month, I had to stop. If I have to stop, her mother's going to tell her that she was right about me. I don't want my mother-in-law to be right about me. Can anybody help me? Oh my God, a half an hour has gone by. It feels like 3 minutes. Whoa, where did that bar come from? And I've just accurately described 95% of what people go through every day. I want you to avoid that. Here's the elephant in the room, and I want to get it out of the way, and then we're going to go right to the charts. No PowerPoint slides today, none of that. Most of you have been raked over the coals by other vendors, other companies online. Really bad people. There's a few good ones. But most of us here today, in our little community of 80 people here this morning, most of us today have gone to this type of an event in the past and said, this seems interesting, and got sucked into some Uber marketing campaign. Some slick salesman calls you. There's a pressure tactic, an offer that you've got to take advantage of. And then this endless stream of expenses. So I'm going to charge you $5,000 to train you. Then there's $1,000 a month for our platinum room. And a lot of you are burned out. This is a place for you. I want you to come and keep coming to these events if that is you. And we're going to restore your confidence, and we're going to show you that just under the surface, your suspicions that somebody somewhere knew what was going to happen next are correct. But I'm going to ask a few things in return. I'm going to ask for a sliver of trust, and I'm going to earn that trust here in a minute, less than a minute. I'm going to tell you everything I know. I've already shared 2 documents with you that have taken almost 10 years to develop for me. So everything is on the table. I just want you to keep an open mind. If you can keep an open mind, despite what you've come here today believing, you're going to leave having learned something very powerful that you can use tomorrow in the market you trade. If you've come here, though, and you're clamped up, you've been badly bruised and scarred, the last company was not kind to you, they took considerably more than they gave, you're going to have a hard time today. Because many times in those circumstances, and I'm not saying it's you, but in many circumstances like yours, we become the scapegoat. People blame us for what happened because of the last guy. So I get that. I'm willing to accept the sins of that last person, but I ask in return that you keep an open mind. A few ground rules. Number 1, you have the right to ask a question and expect an honest answer. If I don't answer your question right away, it's not because I'm avoiding it. It's because 30 other people asked a question and yours got pushed up the list. So you have the right to ask a question, expect an answer, and you have the right to repeat that question until you get an answer or until I acknowledge you. You're not bothering me or being hateful or spiteful when you do that. It's productive for both of us if you keep your question pushed to the front of the line. Don't leave here today thinking I ignored you. It's just that there are a bunch of questions passing through here every minute. Okay? You have the right to suggest different markets for us to analyze today and tell me what markets and time frames you're analyzing. Those are the kinds of questions that I'd like you to break in here today. In return, I'd like you to be active. Type your thoughts in as you have them into this chat box. Please don't sit on the sidelines and look and watch and be entertained. If you came here today to be entertained and just to listen, you won't leave with very much information. You won't retain much of what I say. You'll have wasted a couple hours and maybe got a chuckle or two. But the more you type in, the more questions you ask, the more specific and relevant you make it for you, the better educated you'll be when you leave here today. Does that sound fair? I think it sounds fair. What are we doing here today? Today, we're going to talk about leading indicators. We're going to talk about data mining. We're going to talk about using computer intelligence to uncover the timing patterns of the banks. Do markets follow a series or system of pre-planned times and movements that we can intercept and project with our very powerful trading computers? That's really it. Can we intercept in the data, in the thousands of bars of historical data, can we unleash a computer that many of you have spent between $2,000 and $5,000 on? Can we teach that computer to find the relevant times the markets are moving and then advise us as to which times in the future to watch for? That's the question here today, and one that we've been answering now for almost a decade with over 4,000 customers in every financial market of the world: stocks, ETFs, binary options, forex pairs, and futures especially. That's where we specialize. How do we accomplish this Herculean task of discovering and or proving that these times exist? Well, once a week, Tuesday evenings and afternoons, I send out a link to about 18,000 traders in the futures, forex, equities, and options arenas. So every Tuesday, I send out an email to a buttload of people. And in that email, I give people what are known as histogram forecasts for the next 2 days, Wednesday and Thursday, in 10 markets across 4 different time frames: 1 minute, 3 minute, 5 minute, 15 minute. So that's 5. That's not even 4. 3. So that's 6 different time frames. And we're going to talk about what these histograms mean, how they're interpreted very mechanically, no discretion involved, no off the tip of my tongue, off the tip of my brain. You need me. By the end of today, you won't need me to interpret these signals. In fact, if I had a heart attack right now, I've given you a book with all of the signals in advance. In fact, I'll take a screenshot. Many of you right now, I want you to take a moment, look in your GoToWebinar Control Center, and you'll see, before we even start, that there's a book. There are 2 handouts in your handout section. One is called the Guide to the Histograms. I've already given you the interpretations for the signals. I've already given you the code on what these histograms mean. I'm going to use something I gave you 2 days ago to interpret another thing I gave you 2 days ago for today. So historically, trading vendors will lure you into a condition, into a system, into a model, where they give you 49% of the information. And for me personally, I've had this experience about a half a dozen times. I enter into a financial relationship with that vendor who systematically drags me along by my lip and gives me 1%, 2% more, 3%, 1% more, extracting as many monthly subscriptions as they can. I'm giving you everything I know about time cycles up front. So as of 7 o'clock tonight, I am irrelevant in your pursuit of time language interpretation. Okay, so that's one way to establish credibility with you. I'm telling you everything I know up front. So once I send out the email, it's a fairly straightforward process of legitimizing the method or delegitimizing the method. Meaning we have all day Wednesday and then we have all day Thursday to see if the signals that we gave you bore any significance across those 2 days. And so at the end of the 2 days, we're left with a yay or nay decision to make. Did this help, or did it do nothing or even hurt our chances at being successful? Now, I want to give you a spoiler alert. At the end of almost 10 years of webinars, I've never had a week where it wasn't this. I've never had a week where it was this. Maybe today's the week. Maybe today's the day that the software just sucked. I'm going to be really honest with you right now. I spent a lot of time today with my wife. We had a fight Valentine's Day night. We haven't had one in a while. You could maybe say it was a heated discussion. But today the ice thawed and I spent a lot of time with her because I'm smart. Today. 2 days ago, not smart. Today, smart. So in all honesty, I haven't spent much time going through the other markets that I gave forecasts out for. I spent time with crude this morning because that's the market I watch. Did pretty good with it. I'll show you some setups and sample trades that I took. But for the bulk of this webinar, I'm seeing the results with you for the first time because I'm an idiot. That makes it fun and exciting for me because we're going to experience the results of the histograms together moving forward. So what I'll propose is that we look at this link and first understand what was given out. Carrie says, Michael, my Valentine's card said, I love you more today than yesterday. Yesterday you really got on my nerves. That's pretty much exactly what happened. Aww. Whew. So 2 days ago, I sent everybody. 2 days ago, I sent everybody this link to this page. And this page is the source of legitimizing the method to you. When you first see this page, you're confused. You usually interpret it wrong. And most times interpret the signals backwards, believe it or not. And so today I want to rectify some of the frequently asked questions, the frequently misinterpreted things And I want to focus on what the bloody hell this thing means. Okay? So I gave people forecasts for Wednesday, and I gave people forecasts for Thursday. Okay? And I'm opening the one for the E-mini S&P for today that we've had for 2 days now. So what I'm going to do is move us over to the workspace that has the answers for, or the signals for all of the times that I sent out. And I want to go over that with you. All right, so let's pull this histogram back over here and talk about what it meant, and then we'll look at what actually happened, and we'll do this for a number of markets that are important to you. Fair enough? Those of you that joined us late, you didn't miss much, but welcome on board nonetheless. Okay, what does a histogram represent? A histogram is a digital representation, a fingerprint of sorts in time. It represents a time map where a computer, your computer, my computer, anyone's computer of sufficient power, has systematically sorted through thousands of bars of data in the past. And after sorting and sifting through that information, a trained program, a trained algorithm, an intelligence, right, a computer intelligence, looks unemotionally at all of that data and says, whoa, 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 wait a minute here. Crude futures seems to go up almost every Tuesday at 9:08 for the last 2 or 3 weeks. I'm going to let Michael know about that. Gold futures seem to drop at 11:32, 10:18, and 7:16 every day for the last 3 weeks around this same time. I'm going to let Susan know about that so that when those times come, she'll be ready. I'm going to tell Margaret which times tomorrow are ultra-high probability times because according to the research in the data, those times have produced consistent moves up or down lately. Does everybody understand the concept? It's a behavioral analysis derived from thousands of bars of behavior. Now, the first question that pops up on everybody's brain is, why are they doing this? Why would they do that? It's one of the most frequently asked questions. Why would a bank move consistently at a time? How do you know it's the banks? I know because I've watched it now for, this will be almost 550 webinars. And I watch this happen every week, consistently. And so I have the empirical experience. The customers who've used the software now for almost as long have seen the same thing. And irrefutably, I can tell you that they're following time. Let me give you a glimpse into that here today. First question that everyone asks about the histograms. Michael, why are there two? And which one do I watch? And what does that mean? Why are there two histograms? Which one do I watch? And what does the information mean? Anybody here have those questions earlier in the week when I sent them the email? Margaret, did you ask yourself that question? George, Cliff, Bruce, Alan, did you ask yourself that? How about old customers? Did you ever ask yourself, what does this information mean? Why are there two? And which one do you look at? Yeah. Well, to answer that question, we need to understand how the software is finding the answer to the question, what times should my trader watch for? So in that sense, the Flux is a personal assistant who is considerably smarter at you in one specific area. The Flux is your personal assistant whose only job it is to sort through thousands of bars of historical data in relation to time and to alert you there is something happening consistently lately at a certain time, and you need to be aware when that time rolls around again. So what does that mean in English, Mike? It means this. Bruce, if I open a new chart, I'm going to open CL because it's super fun, and I'm going to look at a 1-minute chart because it'll give me a bunch of signals. Bruce, there are two ways to define the way a market moves, in my humble opinion. Okay. There are two ways to define how a market moves. Bruce, one of the oldest ways and most accepted ways of charting a market's progress generally involves a moving average. And so, Bruce, today, if I ask the computer to describe what happened in regards to price action, and I used a trend filter, the computer would tell me, Michael, the trend started going down at this time. It would then advise me, Michael, the trend started going up at this time. And then, Bruce, the trend started to go down again at this time. Do you understand what I mean by started to go down and started to go up at a certain time? Bruce, these are the points in time vertically where the trend changed direction. You see how it changed from red to green to red again? If I separate the moving average from the chart, the computer can, if I use that as my chosen filter, it can define what time those things took place at. And so, Bruce, it can tell me at what specific point in time this filter logged an important event. So an important event took place at 9:51, an important event took place at 12:19, and an important event took place at 2:18 today. Does that make sense, everybody? So far, so good? Now, the problem with that is twofold. Number one, it's only one day, so we don't glean very much from it. We can't say with any kind of authority that these times will matter tomorrow or next week because we've only looked at one day. The second problem, Bruce, is that the moving average, or the breadth and width of the filter that we're using, the holes in the filter are so large that there are all of these tiny movements or pullbacks along the way. For example, Bruce, if I use a trend filter, it doesn't pick up all of these important times, right? So, Carrie, if you look at this, you'll see that there were some pretty important swings throughout the course of the morning. And Bruce, all of these times, if you're trading 3 or 4 or 5 times a day or more, these were important times where you might have entered into the market and then coming back after lunch, right? But Bruce, this moving average down here is so slow and so large, it's incapable of picking up those minor variations, those legs, the retracements, the extension times. It only sees big picture times, which can be useful, but it's not the whole picture. And so, Bruce, what we employ at that point are momentum filters. And the classic momentum filter, the one everyone's most familiar with, is the MACD. And so now, Bruce, if I tell my PC, I want you to look for time events where the MACD filter hits a maximum value above the zero line. I want you to look for MACD events, time events, where the MACD histogram is at a minimum. Bruce, I've trained, or I'm effectively teaching the computer intelligence what swings are important to me. We've already taught it one filter, but now, Bruce, check it out. If I teach the PC to look this way, now it says, hey, 1025 was important to Michael. 1044 was important to Michael. 11 o'clock was important. 11:10 was important, and so on. Bruce, do you understand the difference? A trend filter can help identify large sweeping movements that begin and end. Think of it like the Titanic leaving port, and God help us if it ever made it, the Titanic arriving at its port. Okay? The Titanic leaving its port and arriving at its port. And Bruce, the MACD are all the times the ship stopped at all the islands along the way. Maybe a Disney cruise, a little less sad, right? So Disney Princess Cruises left the port at 9:51 trend. But Bruce, along the way, they got out at Antigua, they got out at St. Kitts, they got out at Nassau, they got out in the Bahamas, they got out at Key Largo, they got out at Key West, they got out at Miami. So one filter helps us see big picture, move starts, and the markets are rolling. One filter helps us see the moves inside of the overarching trend. And so if we were to look at that in terms of a graphic, the one filter, the power zone on the bottom, is helpful at identifying times where large trends should start and stop. But then the MACD histogram is helpful at identifying the legs inside of that trend. The places, Susan, where the selling pressure should start and the buying pressure should start. The selling pressure should start and the buying pressure should start. So the bottom one is a trend analysis, and the upper one is a momentum analysis, the legs inside of the trend. And depending on the type of way you trade, depending on the size of the moves you're looking for, you can use either or both. And so the challenge then becomes telling the computer to go back into the past, the thousands of bars into the past, to see if there are any patterns where certain things occur at certain times over and over and over again. For example, what if the computer And we go back in time two different ways. I should say this first. We go back in time, Bruce, vertically, and Mamie, we go back in time horizontally. All of our examples today are vertical, but it's just as easy to do a horizontal analysis. In fact, I'm going to teach more about that in tomorrow's open forum session. So today is Thursday. Let's go ahead and highlight a Thursday. Bruce, I've sent the computer into the past 2 weeks of Thursdays. I can go farther if I want, but generally speaking, I don't have to go back usually more than 2 weeks or about 3,500 bars of data to find the patterns the banks don't want me to see. And so what the computer then does, Bruce, is it says, okay, the last 2 Thursdays before today opened, are there any MACD overlaps? What do I mean by overlap? Kevin, imagine this. Imagine a week ago, between 9 and 10 o'clock, our MACD filter looked like this. Imagine for a second, Bruce, that it spots a high at 9:30, right? Just like our study over here on this chart. You with me? Then imagine, Bruce, 2 weeks ago, on the prior Thursday, 2 weeks ago, imagine for a second, Barney, that histogram between 9 and 10 o'clock 2 weeks ago in CL did the same thing. So Bruce, if I have 2 weeks in a row where the histograms look identical, the computer performs, it's a little more complex than this, but it's an additive process. And what it does is it looks at the historical behavior patterns and says, wow, if you did this at the same time as this, then I'm going to say in the future, the addition of those two patterns, Melissa, looks like this. Week 1, week 2. And Bruce, when I add those together, everywhere there's a positive value, they add together. Anywhere there's a negative value, they add together. And in this case, Bruce, when there are 2 or 3 weeks that the same pattern lines up over and over again, the math engine of the Flux says, hey, I'm going to project that time in the future to be a maximum. And so, Bruce, on your histogram, if it was a trend analysis, you would see a timestamp at 9:30. And Wendy, the computer is essentially saying, Wendy, 9:30 2 weeks ago was really important. 9:30 a week ago, the same thing happened. Maybe we should watch tomorrow at 9:30 to see if they do it again. How many people are with me right now? Is there anyone confused? I have a tendency to run ahead when people are feeling left behind. So if that's happening, again, you have the right to stop me. It's sad. It doesn't make any sense. So the additive process implies that if we see a histogram bump on our chart below the 0 line, whatever time there is on that histogram, whether it's a trend analysis or a momentum analysis, this is a pattern 1 in your guidebook, by the way. The implication is that when we arrive at that time, one of two things should happen. If the banks are going to repeat that behavior pattern a third consecutive time. Option number one is this. They're going to pull down, and in an uptrend, Bruce, they should start to go up. So if the market is in an uptrend, option number A says they'll continue to go higher. If the market is in a downtrend or a distribution phase, then Bruce, we may see something different. I'm going to use a slightly different color candle, but Bruce, the market in a downtrend will fall and then consolidate at that time. And I'm going to call that possibility B of pattern one. Because what happens is twofold. If the market is in an uptrend at a pullback, everyone is already buying. And so in that sense, they're pouring gasoline on an already burning fire in the uptrend. And we should see an explosive move upwards. Okay? However, if the market's in a downtrend and everyone is depressed and anxious and the banks have convinced everyone it's the end of the world again, when we arrive at a buying pressure time, Bruce, they'll hold the line. That selling pressure doesn't necessarily push the market up or very far, but it keeps it from falling any lower. Think of the phrase, let's contain the situation. Let's not let things get any worse. And what's happening in that time, that B phase, the banks are taking profit. They're covering their shorts. They're taking a break. They're keeping people off balance. Maybe this is really the bottom. I'm going to buy. Okay, so there's two possibilities, both of which involve buying pressure. Okay? But if we see a histogram like this at all, it's because this happened enough times at that time to appear on our radar. If it only happened once, computer doesn't care. But if it's happening over and over and over again, trust me when I say no one is paying attention. Now, do these times stay these times forever? No. They're subtly shifting week after week. The code changes, and the software re-intercepts new codes each week. That's why it's not 100%. Can you imagine if the market you trade went up or down at the same time every day? There would be no market anymore because everyone would be waiting for a seller when it's time to buy, and everyone would be waiting for a buyer when it's time to sell. And so the banks, in the language of time, are continually eroding certain patterns and evolving other patterns. So just a little asterisk here, side note, these times aren't the same week after week. They shift. And the Flux reprocesses those times for the following week once this week is over. Okay, so that's pattern number one. Pattern number two is a selling pressure pattern. This is straight out of your guidebook that I've given all of you since Tuesday. If we come up into a selling pressure histogram, whatever time that is, Wendy, the computer, the intelligence of the software, artificial or otherwise, is trying to communicate to us, and it's saying, hello, Wendy. I've looked at this market in the time frame you've asked me to analyze, and something fishy is going on. I keep seeing selling pressure at this time, and you need to be careful tomorrow. You need to be careful 3 days from now, 5 days from now. When we get back to that time, I got a suspicion they're going to do it again. Okay? And it'll take one of two forms. When we get to that time, Bruce, here we go. When we arrive at a selling pressure time, if the market is in a downtrend, it will historically pull up into that time and then collapse. It will pull up into that time and collapse. This time becomes an apex. It becomes a pivot. It becomes a place we're expecting banks to drop it like it's hot. They're going to make it rain. If the market is in a downtrend, however, or an uptrend, people are buying and buying and buying. We'll call this first possibility A. If the market is in an uptrend, Bruce, they do something very different. They'll come up or stop moving, and then, Wendy, they'll consolidate. Let's call that B. And the banks will apply selling pressure to the uptrend, and they will contain the situation. This is where chop occurs. If the time signal is counter to the trend, if it's a selling pressure signal in an uptrend, there's turbulence. The markets mix. There's buying and selling happening together. It's like a Middle Eastern bazaar. There's negotiating. But if it's in a downtrend, there's no arguing. The banks wait for that last ounce of buying pressure hope to dry up. They crush everyone's hopes and dreams, and they drop it. So in the case of A, Bruce, we're expecting a pivot and a push down. In the case of B, we're expecting consolidation and an eventual breakout. Pattern number 1, we're expecting a reversal to the upside. Prices are rising, time for them to go even higher into higher highs. But if the market is in a downtrend, we expect the situation to be contained and then an eventual collapse into lower lows because they can only hold it up so long. Make sense? Tien, make sense? Nguyen? Tony? Mel, how am I doing today? I feel like I'm on fire. Feel like I'm doing good. Okay. Now, if the computer goes back into the past, there's a third pattern in your book that I call pattern number 3 because numerically that's where it ends up. And pattern number 3 that the banks are following in time looks like chop. It's a combination of histograms in a really short period of time. So like number 1 and number 2, it has its bounces, but Wendy, those bounces occur in a very short period of time with a lot of small crosses above and below the zero line. So each one of these is a time. And what the computer is essentially saying is that, Michael, Wendy, Bruce, I don't really have a bead. I'll get there, Carrie. I don't really have a bead on what's happening because in the past, it hasn't really done the same thing. It's flat, it's choppy. When I add it all together, it looks like a soup or a stew. It looks like a Bill Clinton lie detector test or a California earthquake seismograph. It's a lot of shaking going on. And so when we get to these times, the bars will historically look like this. And there's a lot of stop runs. So a pattern number 3 implies chop. It implies indecision. And usually implies trader death. This is where accounts die. So if we were to look at the histogram for the ES today, Wendy, can you see on this chart where there is chop right here? Can you see, Bruce, how there are a number of turns in a very short period of time which look just like what I'm outlining here graphically? These will show up on the trend histogram, which is one of the reasons why we watch it. It's a danger signal. It's a time for the computer to say, whoa, whoa, pay attention, because we're sailing into something really messy historically right now. And a lot of you are thinking, it's in the future, it's in the future, it's in the future. How can we tell the future? It's in the future. Why are the banks doing this? Are the banks really doing this? It seems silly if they're doing this. They're doing it. I'm going to prove it to you in a second. We have 2 more patterns to learn, though, before I can effectively show you how to interpret the patterns. 2 more. You learned 3. You're doing awesome. How fantastic. 3 time patterns that Goldman Sachs is using. You now know more than Jim Cramer on TV or any of these crazy puppet heads on CNBC. You understand how vital that information is? You will in a moment. Pattern 1, pattern 2, and pattern 3. Now, pattern 4 and 5 are mind blowers. Pattern 4 and 5 require a little bit of thinking. Now I say this because this is where I lose about half of you. This is where I've lost half of you who eventually became customers. You've told me after you purchased, I had no idea what you were saying with patterns 4 and 5. It took me weeks to get my head around it. So I have to step back and remember that something I speak fluently is going to appear like gibberish to you at first. Okay, I'm going to do it anyway. I'm going to do it. No pain. I'm going to do it. Let me look at pattern number 4. So pattern number 4, whoop, this is the wrong one. I'll start with 1, so I'll do this. Pattern number 5 is a variation of pattern number 1. Pattern number 5 is a variation of pattern number 1. So Bruce, in the past, when we arrive at a pattern number 1, we expect the market to put in a lower low and then go this way. Do you see the direction of the expected move? The incoming direction, Wendy, the plane is landing from the left down. It is going down the escalator to the bottom floor and then pivoting here. That is what usually happens in a pattern, in a pattern 1. I'm looking at myself on the camera. So here's the weird thing. Choking on my own spit. In a pattern 5, the histogram that we've been waiting for looks the same. However, as we get right up to that time, Bruce, they pull a switch. They slip us a Mickey. They mix things up to keep us off balance. But they do it in a way that reveals their intention. So, Melissa, when we come to a pattern 1 histogram, we're expecting the market to follow this path. Think of it like a runway that the plane is supposed to land on at an airport. Have you guys ever seen the way airport runways are laid out? If you look at images overhead, let me see if I can find a good one. Airport runway, Google Earth. Here we go. So if we look at one of these overhead, what I'm basically saying is this. When we get to a pattern 1, Bruce, they're supposed to land this way. They're supposed to sell into the flux buying pressure time, and then Wendy, they take off in that direction. Bruce, does that make sense? That's what we expect in a pattern 1. But occasionally, and you're going to see this today in the S&P, occasionally they come in this way. And they get to the end of the runway, and they go this direction. They come in the opposite direction, and they leave the opposite direction. So we monitor on this side of the time, which glide path are they following? Which direction are the banks driving prices? Because they don't buy at all-time highs. Usually they sell when their investment has matured. And they don't sell when they're at all-time lows, when the product is worth less than it was a few minutes ago. That's usually when they buy. And so in your books, in your guide to the histograms, I have an example of this pattern on page 19. So as we come into a buying pressure time, if the market violates the prior swing high, either to the left or the right, 1 bar, if it pierces that swing high, Wendy, by 1 tick or is even equal to it, we know that they have come into the airport in the wrong direction, the opposite direction. They're on the wrong runway. And so what I'll do in our interpretations, in our signals, is I assign a red arrow on either candle 1 to the left, candle 2 the signal of, or candle 3 to the right. Whichever one of those puts in a higher high is going to get a candle. And Bruce, when we see that pattern, this is what it usually does. Here's an example of a pattern 5 signal in the 1-minute NQ E-mini NASDAQ chart. Plane comes into the runway, the wrong direction, and leaves in the opposite glide path. Now, why do they do this? I have theories. My theory is that sometimes, because of trader hysteria, they get to the price, they go higher than the banks thought they were going to go by that time. Maybe President Trump decided no more coal filters on any electric plants. Woohoo! No more FDA regulation, make a drug and sell it, I don't care. Woohoo! And I think the banks were normally expecting, Bruce, price to be around here at that time where they would normally buy. But something happened. People got super happy, and they get to that time and the banks are like, well, we bought over here, let's take profit. We didn't expect it to get this high, this fast. Let's go in the opposite direction while the sun is shining. Make sense? That's pattern number 5. You got one more to go. So in a pattern number 5, the market puts in a prior swing high, and then it comes up and breaks that high. And when it does, we assign one of these things. And we expect what's known as an inversion. Now, what's nice about this is you don't need me to define an inversion anymore. It took us about 6 years to figure this out, by the way. Not too bright. But when we get it, we get it. And when we get it, I can teach it. Pattern number 5. The expectation at that point is a reversal down. Now, along those lines, a pattern number 2 does the same thing. A pattern number 2 can flip. It's a double agent colluding with the Russians. When you have a pattern 2, it can also be a pattern 4, depending on the incoming direction. Meaning this: if we have a selling pressure time, and right after this we get to look at all the charts together, because now you know the rules. When we get to a selling pressure time, Wendy, we're normally expecting the market to come, put a higher high, have a swing high, and then do this. And then fall away. That's what we normally expect. But what happens when it puts in a swing low and then does this? What if the plane comes into the runway the wrong direction? What if the plane comes into the runway the wrong direction? What if we have a lower swing low, and when we get to this time, we've broken that low? Well, in your Guide to the Histograms book, I have an example of that pattern just above this one, and it looks like this. When we arrive at a selling pressure time and the market went too far, too fast, too low, banks take advantage of that and they buy. And so when we see this pattern on here, when we break the prior swing low, one bar to the left, one bar to the right, or the bar of the signal time, we're going to assign a green arrow to that candle to identify the plane came in from the north and is about to leave to the south. It came in the wrong direction, it's going out the wrong direction. Think of it like a slingshot. You pull the slingshot back opposite the direction you want the rock to go, right? You pull the slingshot back opposite the direction you want it to go. So if we're expecting a selling pressure time, we're expecting them to pull the slingshot this way. But Barney, if they pull the slingshot this way, they're planning for the rock to go pa-ching. And so we use that pattern in the market live to identify what their true intentions are. So we have pattern 4, 1, 2, I'm losing track. 1, 2, 3 are easy. 1, 2, 3 are easy. Then we have pattern 5 and pattern 4. Pattern 4 and pattern 5. Everybody good? Go back and review this video later on if you're still a little brain locked. Now, here's the cool part. When the markets were closed last Thursday, when the markets were closed last Wednesday, I had enough data, to go back and look for patterns. I had enough data to go back and search for patterns. The computer was saying, let me at it, let me go, is there enough data? Are the market's closed yet? Please let me look for patterns. All right. And so at the close of the market Wednesday, Bruce, I had at least 2 weeks of data to look for patterns with histograms, some of them pointing up, some of them pointing down at key times. And so as soon as the market was closed on last Wednesday, I had a histogram for the following week, right? As soon as the market closed last Thursday, the computer had gone back and looked at all the patterns and came back and said, oh, well, if these things happen the way I found them, then we should see this next Thursday. So Bruce, I gave you the emails on Tuesday for Wednesday and Thursday, but I've had them for a week now, right? I have the forecast times for the next 5 days right now. When you use a vertical analysis, you have the forecasts for the following 5 trading days locked in. No changes, no updates, no repainting, no disappearing, carved in stone. So everything we're about to look at on the S&P, we've had for a week. Bottom of my chart was the trend histogram I sent you 2 days ago. Top of the chart is the momentum histogram I sent you 2 days ago. I've had them for a week. Everywhere you see a time above the 0 line has the potential to be either a pattern 2 or a pattern 4. A pattern 2 or a pattern 4, depending on which runway the plane lands on when we get there. Everywhere you see a timestamp below the 0 line can be either a pattern 1 or a pattern 5, depending on which runway the banks took into that time. Same thing down below. It had the potential to be a pattern 2 or a pattern 4. Now, why are we looking at the S&P? Don't you hate that market, Michael? I hate it. I hate it with a Joe Pesci in Casino with a baseball bat in the middle of a cornfield. Hate. I hate it with a Hillary Clinton looking at Donald Trump at 12 o'clock midnight, November 8th. Hate. Why? Because it is one of the most manipulated markets in the world. This is the sandbox, the playground of the dirty bastards who rule it all. Thousands of contracts, millions and millions of dollars a day pass through these Al Capone halls. But I figure if we can find the dirty birds doing these things at these times in this market, everything else should be a piece of cake, right? Let's take a look. The big reveal. Okay, Bruce. Did the markets see selling pressure at 640? Did the banks show up 2 days after I gave you the forecast, 1 week after I had it, and actually drive price lower? At 640 this morning. The answer you're looking for is yes. Okay, now these next questions are rhetorical, meant to lock in the principles to your brain. I'm going to ask them, but I'm asking in a way that I already know the answer and you already know the answer. Not meant to patronize you, but to really drive home the miracle of having a piece of software whose artificial intelligence sifts through thousands of bars of data to find patterns you didn't even believe could exist. At 9 o'clock, we were looking for a pattern 1 or a pattern 5. And at 9 o'clock, we had a pattern 1. The E-mini S&P between the 640 signal and the 9 o'clock signal fell 2.25 points. No big deal there. From 9 o'clock until its apex, the E-mini S&P rose a total of 4.25 points. Okay, now it was not a sustained move. They didn't continue higher and higher and higher, and we're going to talk about that in a second. But I'm working my way through the times. Now, at 11 o'clock, did the 11 o'clock signal look like the pattern that I taught you just a moment ago in the book that you've had for 2 days? Did the banks come into the opposite runway at 11 o'clock and 11:10? Yes. They had a lower low right here, just like in your picture. Lower low. And then, Michael, when they got to the selling pressure time, that was a new low right here at 11 o'clock. And then 11:10 and 11:15 were even lower lows. So all of those candles get arrows. You're so smart. So I'm going to come over here. These two get green arrows because they were lower lows. These two get green arrows because they were lower lows. And because you are stinking geniuses and you have access to the genius that is our organization, I was going to say me, but that would be a lie. I'm not that smart. You knew to look for a reversal here, Bruce. In fact, that was a bottom. So far, for the record, we had 4 histogram times where we were waiting for stuff to happen. Pattern 2s and 4s, patterns 1s and 5s, patterns 2s and 4s. And of those 3 patterns that we've had for 48 hours, 3 of them, all 4 of them, did what we were expecting the banks to do. That is to say, they became pivots in the market. The banks pulled a fast one on everybody but us. Wendy, what do you think everybody was doing right here when the banks put in these 2 big candles down? Mel, what do you think all the retail traders were doing when the E-mini S&P fell like this today? What do you think every small account person in the world was thinking? Oh my God, I knew this trend was too good to be true. Didn't I tell you, Barbara, they're gonna go short, start buying bars of gold and getting the rice in the attic? And the banks went, they're just selling it to us at lower and lower prices. They have no idea what we're going to do at 11:10. Those Flux people do, but there's like a few thousand of them. Nobody cares. Just keep letting them think. Keep letting them think it's going to go short. Oh, I can't stand it. And you're sitting there going, hey, wait a minute. Pattern looks like this one. This pattern is the opposite pattern. That's when they go the other way. I'm not going to go short. Not going to go short. Nuh-uh. Not me. I get a little silly sometimes because there's nobody else in this room all day. And the only person that I have to talk to about this stuff is my wife. And if your wife or your spouse is like my spouse, when you ask them if they care about the thing you do at work, they go like this. They say, that's nice. So when I have a chance to show you this, and it works as good as I know it to work, I get a little loopy. Please don't mistake that with incompetence. There are people who sound way smarter than I, who suck at teaching, and who've made horrible, horrible, poopy-stained trading systems that I wouldn't pay a penny for. But they sound amazing. So please don't confuse my silliness with incompetence, because so far we're 4 signals in. At 11 a.m., it is in a downtrend. So does the airport landing direction overrule the immediate trend? No, Mike, here's the thing. Uptrend or downtrend, if the pattern looks like this. And do you see in the book that I gave you 2 days ago, Michael, this is your 3rd or 4th time on the carousel with me. You spin me right round, baby, right round. This is not your first rodeo. The picture looks the same in the book as it did last week, as it did the week before you came. That is a downtrend. As long as the signal is below the prior swing low, it can be an uptrend or a downtrend. We're expecting a reversal. We're expecting exhaustion. Bruce, what happened to 1220? Did the banks come back and push price higher? The bullies and thugs that they are? Is that a pattern 1 right there? You bet your sweet bippy it is. He's asking questions he knows the answers to again. Michael, did they come back into the market and sell at 205 like we were expecting them to? Again? Were we expecting them to push price higher again at 250 at a pattern 1 setup? Yes. Right into the close. So I want you to see the relative price gaps that this thing dropped. It went down 2 1/4. It went up 4 1/4. It went up from the close of these candles 5 3/4. It went up in that leg 4 1/4. It went down in this leg 2 3/4, and then it went up in this leg 4 1/4 points. How many of you have like $100 daily goal? Michael, I would just like to make $100. And I swear to Mary, Jesus, and Joseph on the lives of my children, if I could get my minder to $100, I would turn the computer off and walk out of the room. It feels like every trade I take goes in the opposite direction, Michael. It feels like someone is standing behind me over my shoulder, and every time I go to push this mouse, they watch and see if I'm buying or selling, and then they push the market in the opposite direction. I swear on cheese and crackers that if I could know and hit my $100 daily goal, I would stop and come back the next day. I wouldn't overtrade. I wouldn't sit there all morning. I'm so fed up. It would be nice to see it go in my direction just for once. Just once. Please, God, please let this trade go in my direction. How many of you do the prayer, the trade prayer? Come on, be honest. How many of you have negotiated with a deity in the middle of a trade? A lot of whys right now, a lot of yeses. Today you know why. The banks create scenarios that look the opposite of what they are about to do. When it looks like a long, it smells like a bottom. Oh, I smell so much buying right here. It's a sell. When it looks like the world is falling apart and people are jumping off of scaffolds to the tarmac below and all hope is lost, I better short this thing because it's going to move 1,000 points down today. We're going to Disney World. Barbara! Buy tickets to Orlando! Why? Because we're shorting this thing and it's going to fall forever. The banks are buying up all the shorts that you can get them and getting ready to push it up. You are a pawn in a complicated, no holds barred, nobody coming to help you series of shenanigans. And that is why there is a 90% failure rate in trading. That is why nearly every other system that you've purchased with a select few, Mel's come across them. There are some good eggs out there who've really nailed down some nice systems. But you can almost count them on one hand, can't you, Mel? You almost know them by name because there's so few of them, as opposed to the masses of regurgitated technical indicators with hyper marketing names. The super zero lag transfusion titanium iron shield hawk system. Wow, they named all their systems after very powerful predatory birds. It must be important. Nobody would name something after an eagle if it was bad. And you see all these websites with hawk and eagle and owl and falcon, and it's like, whoa. And then you get to my system and it's named after a freaking movie. Everybody see the poster on the back wall? And you're like, how serious can this guy be? This is named after a movie. You think we might do that on purpose? Yeah. Okay, so now a word about stops, a word about entries while we're here, because a lot of you are used to vendors telling you, where would I get long or short? When would I get long or short? And so one of the first things you're going to notice, aside from the fact that we were able to locate the pivots 2 days in advance, aside from the fact that the computer was way smarter than we are in identifying these patterns, we want to understand the more important things, the risk to reward ratios, for example. How much are we willing to risk to see if this trade is going to work? And so one of the very first things that I teach new traders who are using our tools, the ones who stick around long enough to listen. Well, I read your review on Emmett Moore's website, and he said you had poo-poo pants and not to trust you. The ones who actually come to the webinar, actually use the software, see it being discussed, go through the signals. The next question you should ask is, well, how much risk is involved here? And one of the first things I teach them is to look at the dot. Now, on this chart, there are a total of 5 indicators. Let's get rid of the bar timer. There are 2 histogram indicators, one for the MACD and one for the power zone or the trend that we talked about earlier. And then, Bruce, right above that, I have what I call a time cycle marker indicator. And Wendy, what that does is when we arrive at the pattern 1 and 2, it puts a red or a green dot depending on which one of those it is. So when it arrives at a pattern 1, it puts a green dot. When it arrives at a pattern 2, it puts a red dot. And the next question that's usually asked is, well, is it on bar, open, or close? And so what I want you to see is that it can be either or both. So there's a parameter in the indicator that lets you choose, hey, I want to see the dot as soon as that candle opens. Fine. There's the candle dot. I want to see the dot when the candle's closed. There's the dot. You can apply the indicator twice, by the way. One at open, one at closed, if you wanted to. You have to remember, though, that you've known about the time and the direction for a week. In your case, 2 days, right? So I encourage people at that point to look at the dot in relation to price action. You have the ability in the software to tell the computer how far away you want the dot to be. And so here, I've programmed my workspace, and you can all have access to this if you want. I don't care. My settings in my personal workspaces have a 3-tick marker separation. I tell the computer, hey, when we get to the time, when you put that dot, can you put it 3 ticks above the high of the candle? Can you put it 3 ticks below the low of the candle? That's about as far away as I want it. Now, why is that important? Because have you noticed that when the trade works, between the signals, it doesn't go past the dot. So in the case of 640, that dot is at 2347.75. Did I get that right? Yep, I don't have my sexy glasses on. Hang on, here they come. They have spray paint all over them because I've been in the garage doing evil genius things. Yes, 23.4775 is the price of that dot. Wendy, do you notice how when the trade works, it never comes above the dot line? Price stays below, and if anything, pushes away from the dot. Let's go ahead and actually color code that, and hopefully you'll see what I'm laying down here for you. We'll use light salmon. Today we're using a fabulous light salmon to describe the way price moves away from the selling pressure dots. Okay, so there's our salmon signal. Now when we get to the 9 o'clock signal, Bruce, I'm going to use the same concept, only I'm going to draw a green dot between the 9 o'clock signal and the 11 o'clock signal. And the software will draw this line for you. I'm doing it by hand so you can see what I'm doing. But your initial stop can be where? At the line or just below the line. And so in this case, we have a buying pressure window. We have a buying pressure window that lasts from 9 o'clock to 11 o'clock. Now, when we get to 9 o'clock, had you entered at the close of the candle, there was about $150 per contract available to you on a 5-minute time frame. If you're looking for bigger moves, we need to look at a 10, 15, maybe a 30-minute time frame for you. But in each of the cases so far, from the close of the candle to the maximum favorable excursion, I want you to see that there's about $100 per contract in there. Now, what's the risk? At 640, we're 1 point away. So the risk at 640 is about 4 ticks. At 9 o'clock, the candle is a bullish higher close, and the risk is about $2. Robert, does that make sense? Nguyen, does that make sense? Wallace? Mike Healy, does that make sense? So if we use something very simple to see, something very quick that we can latch onto, and in this case, just a dot, it gives us a strong visual touchstone, a bulwark, a dam that we shouldn't see breached. Okay? Now, here's the thing about that dam. Melissa, if at any point it touches this line, like right here, touch me in the morning. Uh-oh. Remember that scene from, what's the Bill Murray movie where they're all in the army? Army training, sir. What's the name of the movie with the army? John Candy is in it. Stripes. Remember that guy? You touch my stuff, I kill you. You touch my bunk, I kill you. You touch this line, and Bruce, it is indicative of buying pressure volume. So here for a minute, I want you to see this. When we arrive at 9 o'clock, we're believing that this time is loaded with buying pressure contracts. But Bruce, if it comes back to this line at any point, when we get there and you see this, here's what I want you to see. All those buying contracts that we were hoping would be there to sustain the move, There's like this many left. And the market is now George Foreman in the rumble in the jungle. He's exhausted. He's got nothing left. Ali's been rope-a-doping him for 4 rounds, 5 rounds, 6 rounds. And when you see the market come and touch that line, and especially if it's below the moving average, it is confirming to you that while the banks were committed to the first push, there are no commitments left in place. They've taken all their toys and gone home. And the buyers that were there cricket, 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 are gone. And so, Bruce, you could interpret this, and I teach a trading system that encourages people to look for a short right there. And Bruce, when I do, I teach the customers to put a stop above the candle that touched that line of no return. And had you shorted there, again, think about your $100 daily goal. Had you shorted there, look how far it went before it reversed. Another 5 ticks. Again, we're on a 5-minute chart. But I want you to see the opportunities you have with time signals that you don't have with piece of crap trading software. You know when the times are coming. You know what directions to watch for, 5 possibilities. But more importantly, you know when there is a power vacuum. You know when the soldiers have abandoned their post. And then you can seize the weakness as an opportunity, especially in the direction of a trend. So Mike Healy, if the market is in a downtrend and we touch a green dot line, there are few to no buyers left. And it is safer at that time to a short than it was a few minutes prior. They've taken all of their strong men home. Make sense? So a time failure can be reinterpreted as a trend entry. So far, so good? Now, when we get to pattern 4s, how does that line come into play? When we get to pattern 4s, Michael, the dot's on the wrong side. The dot is on the wrong side. What are you trying to tell me here? Well, here's what you do. You have one of 2 choices. Number 1, make your own damn dot on the other side. So at 11:10, the close, the low of the candle is 37.75. 1, 2, 3. Boom. The next candle, 11:10, right after it, the low is 37.25. 1, 2, 3. Boom. And what I do, Bruce, is I draw these dots. Let's interpret them as green. And now I do exactly what I told you in reverse. Side note, if you have 2 signals within 5 bars of each other, wait for the second one. This is called a double dot setup. When you have a power zone and a momentum dot within 5 bars of each other, wait for the second dot. It's like that Uma Thurman joke in Pulp Fiction. What did one tomato say to the other tomato, Carrie? What did the tomato say to the other tomato in Pulp Fiction? Catch up.
You wait for the second dot to catch up. So here you see the signal at 11 o'clock. 11:10 is 2 bars later. You wait for the second one to catch up with they're within 5 bars of each other. So Bruce, in that case, look, I take the same concept, and there's my stop level. Okay. If you didn't wait and you were aggressive, your 11 o'clock stop would be there. Second side note, momentum times are more precise than trend times because they are based on a more sensitive filter. Momentum times are more precise than trend times because they are based on a more sensitive filter. So if we're going to find an actual high or low, it will most likely be the momentum signal as opposed to the trend signal. Momentum signal is a little sailboat. Trend signal is a cruise ship. Momentum signal is a pistol. Trend signal is a tank. Okay? So that being said, your risk at 11 o'clock is again about $100, 5 ticks, to see if you want to play. At one point, it comes within 1 tick of that dot, but watch. There's another window. Could you get your daily goal in that window? $12.20 comes. It's the next buying pressure time. I feel like James Brown, Melissa. Dun, 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 dun. Get on up. I think it was the chocolate, because it wasn't the water, although that is good water. At 12.20, the risk to take a counter trend trade, which I don't advise, was $100. Had you entered with a $100 risk, the market went $150, $162 in your favor, maximum favorable excursion. At 2:05, the next pattern, if you use the dot, had a line at 23.43, and we had until 2:50. So right now, Bruce, here's what I want you to think. As soon as it touched that line, we were looking for short window. We came into a pattern 4, and then we were looking for buying pressure. That buying pressure was supposed to last until 12.20. At 12.20, we had a pattern 1, so we were looking for more buying pressure. And then Bruce, Wendy, as soon as we touch that line, everything flips, right? With a few minutes left, we're looking for selling pressure until 2:05. And so Bruce, if we had entered with a short signal here, just to show that I am human and I bleed, the market would have stopped us out because it came right back above the high of that candle, and we would have lost $2. $2. Don't want my money, want $2. So we'll go ahead and actually log a loss. You would not have gotten your $100 out of that signal. Then we get to 205. 205 comes along. It is a selling pressure signal, and we have until 250 for it to work. And from 205 to 250, we get our $100 back. Thank you very much, Mr. Goldman. Pleasure doing business with you, Mr. Leidick. I'll see you at 250. I'll be here. Are you guys going to open the vault again at 250? That's our plan. Hey, do you mind if I trade when you guys trade? Sure. Just don't tell all your friends. And here we are a week later, and we have a buying pressure window until 350. Where would your stop be? Very simple system. Look at the dot. What's your risk on the trade at that point? My risk is 3 ticks. My risk is 3 ticks. How far does it go in our direction? Goes up almost $5 or $250 per contract by the next time. Are you starting to see a trend here? Are you starting to see how this might be useful to you in a live market environment? Bruce, you can enter on the close of the candle if you like. So there are 2 schools of thought that a lot of customers employ. Michael, I have this candle, and it has that wonderful dot. It looks like a giant exclamation point. So now, Bruce, we know the risk is down to here, right? Conservatively, using a very simple, very rudimentary thought. There's 2 thought processes. Number 1, I don't want this trade to leave without me. So when you're back testing in the analysis of the market you trade, I know, for example, in the ES, that a lot of times, Bruce, it'll pull back before the plane takes off. And so I propose a 2-contract or a 2-lot system. Number 1, enter with a limit order at the close of the candle. Number 2, put a second lot when it dips down in the direction of the signal, when the risk is half what it was. So if your original risk was $2, look for a second position when the risk is $1. Because then if it works, Bruce, I've got one trade where the profit factor is double. And you can use that one when it works to pay that reptilian part of your brain that wants profit right away. So book your target one with that pullback trade. So if you look at all the signals, Bruce, on this chart, you had an opportunity for a pullback on this trade. You did not have an opportunity for a pullback on that one. You definitely had a pullback opportunity here. You definitely had a pullback opportunity here. You did not have one here. You definitely had one here, and you had one here. So Bruce, if I was looking at this with you as an advisor, which I'm not a certified trading advisor, I can't legally give you advice, I could turn around and say to you, Bruce, wait for a pullback until the risk is no greater than $1. trade for a $2 profit. Would that strategy hold water in this trade environment based on time? So your risk is half your reward. You know the time coming up, you know the pattern, and you know what the stop level should be if the trade is going to work, approximately. Have I not just described like the 5 holy grail principles of trading? Well, let me see. I know when the signals are coming. I know what direction they should go in. I know when I can leave my office and get a clear head and watch a little bit of that Netflix show that I've been wanting to watch. I'm going to do some yoga. That lady across the street comes out and walks her dog. She's really pretty. I'm going to look out the window and smile. Hope she notices me. Okay, 5 minutes before the signal comes, I'm going to come upstairs. I'm going to look at the price action. When the candle closes, when the risk is less than $100 or $100, I'm going to enter. And then I'm going to go for a 8-tick move. And if it fails, I know there are 6 more times that session where I can try. And I won't overtrade. I won't pay the brokers a commission. And if I hit my daily goal, I'm finished. And all of this is based on when the banks are usually trading. Not some lagging black box proprietary indicator with secret Colonel's recipe sauce that I don't know. Leidig practically told me how the software works. I bet you if I was a programmer, I could make this myself. I feel so confident and reassured now. I think I want a sandwich. So, all of that is leading up to my favorite question. All of that is leading up to my favorite question of the week. Melissa, you know what the question is? You know what my question is, don't you? Yes, you do. Yes, you do. On a scale of 0 to 100, 0 to 25%, 25 to 50%, 50 to 75%, 75 to 100%. What percentage of the times did the patterns we've been waiting 2 days for actually play out in the future present? Was it 0 to 25%, 25 to 50%, 50 to 75%, or 75 to 100%? Where do I get to put the arrow this week? I need 10 people to answer the question for me. Customers, non-customers, visiting dignitaries and diplomats. I don't care. I have 2 answers, 3 answers, 4, 6 more, please. I've done so much work. Please help me with this one thing. I'm asking you to type 7 things and hit enter. 1, 2, 3, 4. Nguyen, are you being serious or sarcastic? Please tell me if you're being serious or sarcastic. Okay. There were 1, 2, 3, 4, 5, 6, 7 signals, and the 8th one failed at the end of the day. So I have 1, 2, 3, 4, 5, 6, 7, 8 signals. Mathematically, now I don't know Common Core math. Mathematically, I'm looking at 7 out of 8 of the signals worked. Now if I take my calculator and I hit 7 divided by 8, enter, times 100, that says 87.5% correct. And somebody wrote 0 to 25. Can a few more people answer, or is it okay if I just answer for you? Is there anyone here who would argue with me that the software wasn't at least 60 to 70% accurate? Can I say that? Is there anyone here who says that's not true? Speak now or forever hold your pieces. Michael, why are you belaboring this point? I am, because of this reason. You know the patterns now. Pattern number 4. Pattern number 5. Pattern number 1. And pattern number 2. I've taught you them. Do you understand the bank can't take this away from you now? You now know 5 words in bank. And all you have to do is apply this knowledge in real time to any of these other markets that we analyzed. Okay? And what we're essentially agreeing to here, and this is where I start to get, your brain starts to fill with all sorts of crazy thoughts right now. And I'm going to address those. What you are corporately agreeing to is that a computer loaded with an intelligent program that sorted and sifted my historical data, that's you, found times and directions that played out 2 days later, 3/4 of the time or more in the largest and most liquid futures market in the world. If a leading indicator can do it, what does it say about the lagging indicators that most traders are using? Are they using the right or the wrong tool for the job? If it's possible to be this accurate in the most corrupt market in the world, these are the guys that caused the financial collapse in 2008. These are the guys that profited from the collapse in 2008 and got trillions of dollars in TARP money. It's insane how many of these dudes will be in hell someday. There'll be a special place for them. We knew what they were going to do 2 days before they did it. If that's the case, if you have a choice of 2 tools, do you use the one that can predict what the banks are going to do in advance? Or do you use the one that tells you what just happened a few minutes ago? This one, right? If it's possible to know, why would you not want to know? And so it's not just the E-mini S&P. It's other markets. This was what happened at the times I gave you in crude futures today. This was what happened at the times I gave you in crude futures today. I took 3 different trades today, and one of my favorites was this one right here. Can you guys see that on my screen, or does GoToWebinar not show that one? It probably doesn't show it. Let me save it. This was my setup today, and I waited all morning for it. Bruce, do you see what happened? At 10:13 and 10:16, the trend was down. At 10:13 and 10:16, I knew how much my risk was. I knew how long the banks were going to try to sell. And so I was in this sucker the whole way down. It got to 50 ticks straight down, and I could hear people screaming. And then when it got to the bottom, I watched and I waited. And I waited for the second of the 2 signals. And I took this screenshot. And Bruce, when I saw that, the market had put in a bottom, a double bottom. It had come down, retested it, but not quite as low. You know this as an ABC pattern. And we got to 1037. And Bruce, what do you think I was looking for at 1037? How big was my risk? There was the dot. Here's what I did. Melissa, I went right after it. But I knew when. I knew when to go after it. And so over the course of 2 signals, I knew how long I had. I waited for the second window. And Bruce, there's no more sellers at this point. All the sellers at this point are dead. I have a wide open buying window. It's counter trend. I hate it. I feel guilty. I've gone to a meeting and I've confessed. Forgive me, Father, I have taken a counter trend trade. How long has it been since your last trend trade? It's been 14 hours and 37 minutes. All right. Go home and take 30 trend trades, and we'll be forgiving you for your counter trend attrition. But this is an example of a trade using the same principles I just taught you about from times that I gave you 2 days ago. There's the signals. There's the time map. And all I did was use the same 5 patterns that you're aware of. Are there any questions about this? Any questions about anything I've demonstrated to you so far? Because we're seeing the same accuracy rate. 1, 2, 3, 4, 5, 6, 7, 8, 9. And what lesson do we need to remember? All of the times on this chart, every signal except the moving average, every signal is based on a 1-week-old guess taken from 2 weeks of historical data mining analyses. The dots have nothing to do with what happened today. The histograms have nothing to do with what happened today. If you can know the times, why would you not want to know the times? By the way, if you're wondering if this works in Forex, here are the signals from the Canadian dollar that I gave you 2 days ago. Here are the signals from the Canadian dollar that I gave you 2 days ago. Bruce, were the Forex signals in our 60 to 70% window of accuracy? Did the patterns unpack the way we expected them to 2 days later? It's kind of ridiculous, right? Forex is trillions of dollars. It's one thing if we can do this with a futures index. It's another thing entirely if we can project what world banks will do to currencies and see this type of accuracy 2 to 5 days later and catch them manipulating the value, because these markets are trillions of dollars, not millions or billions. This is a huge pool of what would we call it? Stanky corruption. This shouldn't work on the Canadian dollar. This shouldn't work on the euro dollar. This shouldn't work on the pound dollar or the pound yen or the pound New Zealand dollar or the Aussie dollar, and it does. Why? Because this is the language of the banks. The banks have been using time for over a century. How do we know this? Because one of the least understood and most controversial men in trading history told us this would happen. Time is the most important factor when it comes to determining market movements. And by studying the past records, you will be able to prove for yourself that history does repeat. And that by knowing the past, you can tell the future. By knowing the past, you can tell the future. Well, Michael, that's not what he meant in an esoteric sense. You see, the square of 9, when properly adjudicated relative to the consternation of Venus in relation to Saturn. We really truly understand. Shut up. What he said was this: if you study past records of the instrument you trade, you will catch banks doing the same thing again in the future. I don't want to hear what your opinions on GAN are. More people exist with opinions about GAN than have hiney holes, and I'm sick of the emails. I'm not a GAN trader. But if some dead guy 100 years ago said we would see what we're seeing doing the thing he said to do, odds are, call me crazy, that the banks were doing then what they're doing now. They haven't stopped in 100 years. In 100 years, nobody's taken advantage of it on a mass scale. We are a fleck of dust in a drop in an ocean of retail traders. Oh, Michael, are you worried the software is not going to work if too many people use it? I have 4,000 users in a world comprised of tens of millions of retail traders. Our customers grab crumbs, $1,000 crumbs here, $1,000 crumbs there, and the banks go, "Did you guys hear something? It's probably a bug." We are bugs to them. And they open up that vault, Bruce, and they empty out all that money, and every once in a while, a coin falls, and we reach over, we grab that coin, and we say, "I'll see you guys in 19 and a half minutes. And 19 and a half minutes go by. Hey, you guys getting ready to open the vault again? Can I grab a little bit while we're here? Okay. I'll see you in 27.75 minutes. Hey, it's 26 minutes later. Are you guys getting ready to buy again? And I know it sounds silly, and I know I'm hyper, but that's really it. Because right now, if we go back to the original question that I posed, did the software work or did it not work? And so far I've demonstrated to you in the E-mini S&P, I've demonstrated to you in crude futures, and I've demonstrated to you in the dollar Canadian. I only have a couple hours to do this before you pass out. I get that. But so far in each of those markets, the accuracy has been 60, 70, 80. And when that happens, you don't have the right, you forfeit the ability to ever say that this didn't work. Statistically speaking, what we've done here tonight is impossible. I'm outperforming the best and brightest minds on any television program you can tune into on any given trading day. And yet no one calls me. I have consistently told people when the biggest moves of the E-mini S&P were coming in advance on a daily chart. I've been doing it now with this indicator for years. I've been telling people when the highs and when the lows were coming in advance. I have been telling them when the pattern 5s were coming. I have been telling them when the pattern 4s have been coming on a daily time frame. I put out a YouTube video a week ago and I told everyone this is coming. This was coming. I told them when this and this and this and this and this and this and this was coming. And nobody believes me. But I'm going to keep coming to the webinars, and I'm going to keep teaching this. Because at the end of the day, I can help a lot of people get their edge back. Okay. Any questions? How do I get the software? I'm glad you asked.